It's going to be a workshop based around the yellow box strategy. It's one of the simplest tools you can use on the system, and it's a very mechanical strategy. So not a whole lot of your own discretion needs to go into taking these trades, and it does have a fairly high win rate. Okay. So for starters, where do you even go to get the yellow box? You can get it on any symbol, futures, stocks, whatever you want. You're going to go on the 7-wave 60-minute. Now, when you're charting it for futures, because there's a 10-minute delay, you need to wait until 2:10 or 5:10 Eastern to start charting it, because you need the market to be closed so you have the current closing price, and then you can chart it from futures close to the futures open. So we won't chart out GC just yet, but I'll kind of give you guys a breakdown of what's actually going on when you're here. So you're going to go 7-wave 60-minute, right click and go to Option Analyzer. And then you're going to click this drop down here that says normal. Go buy today's close. You'll see this yellow box pop up. And you want to make sure you're also on the current price. Because if you're not, you're pulling from pivot, which is a completely different price. You can see our pivot value is 40.38, but our actual price is 39.78. So you want to make sure, again, you're on current price, or else all your values are going to be wrong. After that, go ahead and click this box right here. We'll expand it. And then you could click lock mouse tracking to drag this up and down. The crosshair price will show up right down here where my mouse is circling. All right, so now you're here. This is where we get the yellow box. The idea behind this, these are all hourly candles on the 7-wave, right? Notice how most of these candles stay within this yellow box here. This is representing where most of our time is spent. Okay? And then when we break out of this yellow box, the whole goal or idea then becomes, okay, well, this is where most of our candles are spent, or most of our time is spent. When we do break out of this yellow box, where do we reach on average? So all these candles that are breaking out, which doesn't happen often, but when they do, where do we typically reach? So you'll drag your crosshair to an area that you have multiple reversals, or where multiple candles reach after breaking out of the yellow box. Example being right about here. If you look left to right, really good example of, okay, well, when we break out of the yellow box, most of our candles reach this point here. And that price would be 400.67. Again, we will come back in about 20 minutes to rechart this. We'll go show examples on QQQ, Meta, really any symbol you want. And then when 2:10 comes, or 5:10 Eastern, we'll come back to chart futures. But the idea then becomes, okay, well, where do we reach on average? That's right around here. And then you go up to the top, that becomes your max range. So you have your average range and max range. And to get the top and bottom yellow box values, it's this value you see right here, 3987.91, 3968.7. That's your top and bottom yellow box. So it's a set value. You don't have to like hover your crosshair over the top and bottom to try and get it. It's these two values right here. And then you do the same thing for downside, and you get your average range and max range. We'll go a little bit more in depth on that in, again, 20 minutes when it's actually updated for futures. Now, how you can actually trade this is coming over to, this was an example on NQ, which we'll go over in a second. And here are the charts I do every day for GC. All this extra levels like spread monster and things like that, we'll go over in the next workshop. But what we're mainly going to be focusing on is the yellow box. So how it then works is, we know, okay, well, when we break out of this yellow box we're seeing here, typically we get a move to what we call average range, right? All these breakout candles reach on average our average range resistance or average range support. So how we then actually trade that is wait for a 15-minute break and close on the yellow box chart. So you can see 15-minute break below bottom yellow box. Same thing here, 15-minute break below bottom yellow box. And then also over here, 15-minute break above top yellow box. What you then do, this is for the first break and close of the day. All the other ones after that, we don't really pay attention to. You can see over here, 15-minute break above We don't care. It's for the first break and close of the day. First one here, first one here, first one here. What then happens is when we break out of that yellow box and close on the 15-minute, 75% of the time we are going to reach average range before the opposite side of the yellow box, because it's saying, okay, well, when we break out of this here, 75% of the time the candles reach this average range. So there's a couple ways you can then play it. One method that Coop likes to use, what he likes to look for is when a short median is inside the yellow box, he waits for a 15-minute break, retest of that short median, and then stops below bottom yellow box, because we know, okay, well, even at this point, 75% of the time this average range should be getting hit before bottom yellow box. You can see here it was very close, but it did end up playing out. On those, you get extremely good RR. But they don't happen often. Like, we don't see our short medians or long medians inside the yellow box very frequently, but when they do, that's one way to trade yellow box. Wait for that 15-minute close, retest the short median, play continuation to average range. Now, there's two other ways you see people play it pretty often, which is a 15-minute break of the top or bottom yellow box, and then a retest of top or bottom yellow box. So you can see here, you go long, retest, you break top yellow box, retest it, go long, TP at average range, stop at yellow box, or stop below vectors. Stop below vectors is going to give you slightly better RR, which is my go-to, just because, bottom yellow box, unless I'm going off longs off a short median or whatever else it may be, I prefer to just play off the vectors. And then the other model is breaking close below, then a retest of vectors, and then playing continuation to average range, and just putting your stop above or below the last vector value, which is very simple and what most people trade. So you'll see here, this is an example on NQ from 2 days ago. 15-minute chart, 15-minute close above top yellow box, retest vector, go long off the top of vectors, put your stop below vectors, and then target average range. The reason there's average range 1 and average range 2, you don't have to do this, but what some people will do is, if you look on this chart here, say, okay, well, when we break top yellow box, a lot of the reversals happen right about here. If you look left to right, that's where a lot of candles reach before reversing. But then you can also make the argument, okay, well, there's also this level right around here that a lot of candles reach before reversing. So you can call really either one average range. But if you want two separate targets, that's the reason for an average range 1, average range 2. You can take partials here, and if we're getting enough volatility or the trend's moving in the right direction, you can target that full TP at the second average range. I don't use TOS vectors, so for this, here's the Thinkorswim vector, guys. You can see it's this gray line here. I don't use that for entry. I prefer to use the vectors from, so let's just say, okay, let's say we broke out a yellow box right now on GC. I would come through on the 20-way 5-minute, get vector at 81.95, 7-way 5 minutes at 78.55, 10-way 15-minute has 81.8, and 50-way 1-minute has 79.55. So I would take all those values to then chart out this vector box here and use that for entry. So 15-minute close above, top yellow box, retest vector, put stops below, and then play continuation. This gives you probably the best RR outside of, again, that strategy Coop uses with the short median or long median inside yellow box, because that doesn't happen very often, whereas this vector retest does happen very frequently. If you look, so this was on NQ, on that same day on GC, you'll see it was right here. So we closed below bottom yellow box on the 15-minute, retested bottom yellow box, and at that same time, we were also retesting vectors. So you got in, your entry was bottom yellow box paired with vectors, and then you could just play that continuation of the downside. Now, you don't always have to use average range as your full TP. It's more of, okay, well, when we do break above or below yellow box, 75% of the time this level will be hit. So that's a good target. And then if it's supported on fractals for lower or higher, that's when you could decide on your own if you want to continue to hold, trail off vectors, whatever it may be. Trailing off vectors is super simple. If you go back to that NQ play, you'll see, again, break above, retest vectors, then you just trail your stops off vectors. So if we have a 15-minute close below vectors, you can exit the trade. Or you just put your stops a couple points below. On NQ, I like to go anywhere from like 10 to 15 points below the last vector value. And you'll see you can just trail your vectors on the move up. Do you prefer NQ or GC? Honestly, both work great. There was, let me see if I can find it for you guys. But there was a week, or a couple weeks actually, back in March and February, where the yellow box won 28 days out of 31. So this is going to be on the 1 hour, so it's not going to be completely accurate. But what you'll see is we break out of top yellow box and hit average range here. We did it again right here. Another win here. So that's 3 for 3, 4 for 4, 5 for 5, 6 for 6, 7 for 7, 8 for 8, 9 for 9. This day, I don't want to guarantee a win or loss because it did hit both sides, but another one here, 10 for 10. Another one, 11 for 11, 12 for 12, 13 for 13. So you guys get the idea. This can go. This day there's no trade because there was a gap. And this day we stayed in yellow box literally all day until we finally broke out. So 14 for 14. And if you go back even further, the win streak continued again. It was 28 days out of 31. The biggest thing you're going to want to do when trading the yellow box is have consistency in your sizing. There will be times, there has been times where yellow box lost 4 days in a row, right? But if you continue to trade it over a long period of time and keep that consistent sizing, you should see a positive result from it. Would a breakout of yellow box still be valid if it comes to the opposite side of yellow box, wicks out, then continues to break out as long as it doesn't close past the other side of the yellow box? Yeah, so that's an example you'll see right here. Yellow box is still valid. It's not in play until a 15-minute close. So if you look right here, we wicked below bottom yellow box, but we got no close. That's not really a breakout and hold for a move to the downside. So we're still waiting for a 15-minute close even after we wicked below here. Yellow box then officially becomes in play after this 15-minute close above. And then you wait for that retest of vectors and play continuation to the upside. I use the 15-minute mainly because there has been a lot of times, like if you look here, let's see, this was on the 5-minute. Yeah, so right here, you would have got stopped on this trade. If you waited for a 5-minute close below, retest, some vectors were probably somewhere in this range, and then you would have got stopped. 15 minutes is what the 75% win rate is tracked with. So that's kind of the go-to that most people will use. Actually, we'll do that now while we're waiting for 5:10 Eastern. Is these white dash lines. So you already know you have top yellow box, bottom yellow box, average range to both sides, and then max range. But we also, ignoring all of these white dash lines with labels like normal range, wall long, long median, ignore all those because we'll go over that in the next workshop. That comes from the spread monster. But these white dash lines with no values listed on them. And you'll see there's times where we bounce off them really well. Right here, and so on, like over here. What they are, if you go back to that yellow box, are previous hourly candles that broke out of the yellow box that aren't considered average range or max range. So if you'll see here, let's just say this is what we're calling average range for tomorrow. You still have a ton of previous reversals at this point if you look left to right at this range, but that's kind of a little too low for what we would want to consider average range because there are a lot of candles that go higher. But you still see a lot of previous reversals at this point, and if you go ahead and look at the crosshair price right there, that's about 39.96.41. Then after that, right here, there's about 4 or 5 reversals looking left to right that line up with this point right here. But that's not what we consider average range. So we'll try that out, 40.15.66. And then you could do another one like right here, 40.35.91. And then you do the same thing for the downside. So like right around here, this isn't considered average range, but if you look left to right, tons of previous reversals along this line. And same thing here, not average range, but tons of previous reversals. So you can chart out those areas that when we break out of the yellow box, areas we previously reversed at, because these are all previous highs and lows after a breakout of the yellow box. So if we reverse there previously, we can expect that it can happen again. I don't trade off these alone, but they are a nice confluence to have. Like you can see, we break out a top yellow box here, we start chopping across that white dashed line. Or we break out a bottom yellow box here, reverse at that white dashed line, or reverse at that white dashed line, and so on, right? It's not enough to place a trade off of it, but if you see, open states, clusters, spread monster levels all lining up along with this, that's just an extra confluence to have, and no one's going to complain about having more data on their chart. Now, I don't like to use yellow box breakout on things like QQQ, Meta, whatever stocks you decide to chart on, just because with futures, the time does not matter, right? There's been a time we've been in a yellow box trade for over 8.5 hours before it finally hit average range. If you're in a trade on options for 8.5 hours, that contract is getting cooked, even if you end up hitting average range. So I use it more as a confluence for levels rather than an actual breakout strategy. What size you use, that's more of like a you question on what's a good risk for your account, right? Like I don't go with a set amount of contracts for every trade. It's more of a set dollar amount. So for me, like I don't like to risk more than $300 on a trade if I'm copy trading across multiple fundeds. So example, if I only need a 30-point stop, you're able to use more contracts. Let's just say in this example, we broke above top yellow box, retest vectors, and our vector range was only about 25 points, right? So our stop was 31 points. If instead our vectors look something like this and we needed to use a much larger stop, I'm going to still go with that $300 risk, but then I'm going to have less contracts for the trade. So sizing is totally up to you guys and like what's a good risk management plan for your account. But it's just when you do decide on that, stay consistent to it. So you don't fetch the values from QQQ and convert them. You pull it right from NQ. I do. There are people like when Chloe charts her yellow box, she likes to pull from QQQ and then convert to NQ. I personally like to chart directly from GC. Like when I was that February to March period when it won 28 out of 31 days, that was all on GC directly. It wasn't from GLD and then converting to GC. But you're more than welcome to experiment with both. If you have the time, you could chart out both and see what the difference looks like. But for me personally, if I'm charting GC, I'm charting it directly from it. So again, 7-week, 60-minute option analyzer. Go to current and buy today's close. So the pivot value or the current value should be whatever the closing price is. So you can see 39.79.9. Our closing price was 39.79.9. So that's how you know it's updated to our current price. And now we can go ahead and grab our levels. So I personally just like to write this on like a piece of paper so it's easier to chart later. You guys can do it however you'd like. But what we'll first start off with is getting the average range, 4,000.77. And one other quick thing, if you look over on the right-hand side, see this point percent right here, 0.5%, 0.6%, 0.7%. I'd say typically you're going to find, at least when you're charting GC, you're typically going to find the average range at about 0.4 to 0.6%, somewhere in that range. Now, if there's more volatility in the market, you might see that go a little bit higher, like more candles are breaking out of the yellow box with a larger move in either direction. So back in, January and February, when we had that insane volatility on GC, our average range was typically around like 0.8 to 0.9%. So your average range was much higher because there was more volatility in the market. But right now, I'd say typically you're seeing 0.4 to 0.6%. If you look at average range today, I'd say right around here is a pretty valid one. And then you'll go ahead and chart out max range, which is the highest candle you see. That would be 4064.07, or you could just round it before you chart it. So 4064.1. Then we'll get bottom yellow box, 3969.8, 3989.0 for top yellow box. Then we'll get average range to the downside, which is right around here at that 0.5%, 0.6%. That's at 3957.1. And 3912.5 is your max range. Then we'll go back through and grab those white dashed lines. So right about here, tons of previous reversals that we're not going to consider average range. That's at 3994.7. Right around here again, tons of previous reversals. That's at 4013.4. Another one here at 4026.6. And then last up, you got two previous reversals here, 4053.9. Then we'll do the downside. Right here, tons of previous reversals, 3963.6. Right here you have 3943. And then last level we'll chart is here at 3934.2. Then the pivot value, you can see every day we have pivot. That's just the middle of the yellow box or our closing day price. So you can just see here 3979.9, or here 3979.9, or just grab this current value 3979.9. They're all the same. Where do you see the price level? The price level is right. See this 3890.7? That'll change as you drag your crosshair down and up. And to be able to drag your crosshair down and up, click lock mouse tracking. See how right now it's not doing anything? Now you can drag it up and down, and that price will move back and forth. Yeah, so you only chart out the yellow box once a day. I chart it after 5:10 Eastern, before 6 Eastern when the futures market opens, and then it's valid throughout the entire day up until futures market close, and then I do the same thing tomorrow at 5:10 Eastern. And I won't bore you guys with actually charting it out. I mean, once you do it once on Thinkorswim, it's a lot easier because you can pretty much just come in, duplicate the level, and then type in today's max range, which is 4064.1, move it forward a day, and I just do that for all the levels. So I'm not going to bore you guys with that, but that's the yellow box strategy. You can use it as, levels for confluence, whether it's these white dashed lines, average range you want to take reversals off of, max range reversals off of, rejections off top or bottom yellow box for continuation if you have a daily bias, or you want to play the breakout of the yellow box. There's different ways you can use it.